Frank has just mentioned the benefits of some super fund lending and the benefits of purchasing houses in your super fund. So it's quite recent, I think. Up until the global financial crisis, people were sort of more inclined to invest in shares and whatnot. So I think this is sort of a bit of a less risk option for some people. So St George Bank is quite competitive in this space. As Jason mentioned, we'll do 15 years interest only. We'll do 15 years interest only, whereas most banks would limit you to 5 years, and like Jason mentioned, you would then be having to roll over the interest only period thereafter. So we'll look at those up to 80% LVR, so you have to put in a 20% deposit. That deposit does come from your super fund. And Frank was mentioning additional contributions. If your super fund doesn't currently service the loan at 80%, we will take those extra contributions into consideration to service the loan, as long as you can afford to contribute those, of course. We'll look at refinances as well as purchases. So if anyone here has a loan with another bank, we can refinance them if the rates are more competitive, which, as Jason was saying, the fixed rates at the moment are actually quite sharp. You're all experts on the benefits of offset accounts now, so we'll actually offset your super fund loans to minimise the interest that you're paying on those loans. So the next thing I'm going to talk about is our family pledge policy. So essentially what this is if you're buying a property and you've got a family member who's willing to put up a property that they have equity in as an additional security for the bank, it brings your overall exposure down. And if anyone's purchased a property in the room over 80% of the value of the property, you'll know about mortgage insurance. So that can be quite expensive. It can be tens of thousands of dollars, and to a first home buyer that can sort of blow the budget a little bit. So this basically means that you won't have to pay any mortgage insurance. So what we do is we set up 80% against your new purchase, and then we can put up to 20% against the property provided by your family member. So a lot of first home buyers might have a parent who has a property worth, $500,000-600,000 with no loan against it. So this is where this option works perfectly. And if you can save 10-20 grand on your upfront costs to enter into the property market, obviously that's a huge benefit. So the parents don't need to provide any income verification. All they're doing is providing a security for you, essentially for us to take a mortgage over. You get extra discounts under that package too at the moment, so yeah, it's not an expensive option. So that's it from me, short and sweet. So thank you, Jason, for having me here to talk about St George.